Today I'll be going over how I was able to make 30K in a single session within just 2 hours. And the crazy part is it wasn't even trading New York session or London session, some volatile session. It was trading purely Asia session and still taking advantage of the volatility we currently have within the market for a reason. Everyone hates on Asia session. They think you can't trade Asia session profitably, but that is completely false. I still make a lot of profits trading Asia session, and it's just about learning how to trade these sessions. Most importantly, understanding the right market conditions to be trading those sessions, specifically in my case, Asia session. So let me just go over the trades that made me 30K. We'll go over the trades on ES first. So on ES, we have a trade here, and this is a trade I took on Asia session using the SH system, the stop 100 strategy system I teach within the course and mentorship to my students. All it is we need a clear draw on liquidity, which I do here. If you go in the 1 minute 15 minute, we have my 50% range, and we have not done a full mitigation yet. This is not a mitigation phase here. This is inducement here. So for us to complete the mitigation phase, I expect us to at least go mitigate this flip, or an origin down below here, which is what price just mitigated to potentially create another mitigation phase between this structure here. So my draw on liquidity was lower. That's number one. Number two is you want to trade towards that draw on liquidity. With the stop 100 system, all we're looking for is an internal change in characters, but we expect them to be fake internal change in characters. So a typical internal change in character is we make higher highs, higher lows, and then we make a higher high, lower high, and higher high like this. However, stop 100 strategy, the strategy I made, that I don't know anyone else that teaches it, because I've never seen anyone else that teaches it. This is something I found just purely based on my own personal market experience, is instead of longing here for this pullback or waiting for this pullback to long here, we short this because our draw on liquidity is lower. And we take out all those people that are buying. So all the people that are buying here off this inducement here within premium of the range, they are getting their stop losses taken out by me. And I'm also joking, it's not by me alone, but technically it is somewhat by me because they're selling their orders basically to me since I'm selling and they're buying. So we're on opposite ends of the spectrum. So we have to identify internal structure, right? And we swept all this internal line liquidity prior, so we don't care about this structure no more really. We're focusing on what the intermediate structure is telling us internally. We made a low, made a higher low, or higher lower high, and with lower low. And where was the internal break structure? Right here. Where was the high? Either here or here. These highs are very close to each other. You can consider either one of them. This is obviously the best high, but I'll explain later why I took it prematurely. Instead of waiting for this internal high to get taken out, I took this internal high instead, because this is the internal high that made a new internal low. If this high price never made or broke this low, I would not be using this at all. I would not use actually really anything. Maybe I might use this or this. But at that point, the strategy is invalid. And there's a lot of reasons why, but I won't get into it because this video, I don't want to make it too long. So I waited for an internal high to get taken out. And once it got taken out, I enter on the candle that takes it out. And stop loss is very important with the strategy. For me, it varies. There's 3 different types of stop losses I typically teach within the course to the mentorship students that they use. But for me, I use stop loss 1, which is basically anticipating that we never mitigate this flip PY here, because we shouldn't. If we do mitigate this flip PY, then this does not become a stop 100 strategy setup anymore. This just becomes my typical setup, my strategy, where I just wait for entry confirmation of my entry model and then continue short. This would be a full mitigation cycle or pullback. But no, this here is not a pullback to me, defined. It's not a mitigation cycle. This here is an internal liquidity sweep. And also, the reason why I entered a bit early is because I saw we already took out highs. We already took out a lot of people that are selling early too. There's people selling this probably, thinking this is resistance. And this because this is what everyone teaches them, and that's not true at all. There's liquidity in the market. People selling this as well, right? Waiting for price to come back, and there's no OB there. Everything's fully mitigated also. There's no reason to sell here, and they get stopped out. These guys showing here, they get stopped out. And what happens to other people? People are buying here, they also get stopped out by me later. Why? Because I shorted to their stop loss, and even further than that. So now you guys can see, basically understand, how the market is able to create manipulation to not just one side, but both sides of the market. This is where both buyers and sellers are getting stopped out, even though price has not really done much here. even though price later on went to the downside, the people shorting still lost because they don't understand how the market truly moves. Like what I'm showing you guys here. We wait for that internal high or low to get taken, and then we enter our position. Until then, we don't enter anything. I'm not entering trades here. I'm not entering any trades here. I'm waiting for this. And I don't look to the right when I'm trading internal stop hunter strategy usually. I don't care about this structure here. I'm looking for liquidity to the left that delivered to the PY that I'm expecting to fail, which is this PY here. That is inducement. Now that's all clear. And if it's not clear, I'd recommend you to check out the E2 advanced course to really familiarize yourself with all these concepts I'm talking about, so you can be the next person to make 19 risk reward within a session, right? I'm looking for people that really want to be serious about the trading, that truly want to become really good traders, because those are students I like to teach, and I spend a lot of time teaching and making those videos within the course. People that have watched the course can definitely vouch for that. Their course is like, it's like 80 plus videos, and it's like 40 hours long or something like that. It's something crazy. So definitely wish and hope you guys would support nonetheless. If you are already in the course, that you'd provide feedback as well to me to make it even better than it already is. But point is, we got risk reward here. Now there's 3 different targets. You could have targeted this low here in the inducement, this low here, but the proper target would have been this low here. The reason why I didn't want to target the proper TP, which I usually would TP, is because this trade was low long. It's about an hour-ish. Usually most of my winning trades are 30 minutes long from this data that I collected. But I do understand that this is Asia session, right? We have less volatility than most other sessions. But I would not say this is less volatility. This is an almost 1% move on ES, guys. If you know the market, you understand 1 pence move in an hour is a massive move on ES, even during New York session. It's just because of the current volatility in the market, we were able to provide such good trading conditions, hence why I'm encouraging you guys to trade Asia session right now. You get very good volatility still during Asia session to make a ton of money. And this money can be life-changing too, once you learn the skill, of course, not just gambling. So for me, what did I say again? I targeted, I missed a low. There's one more low here. I targeted this low right here, right? So you could have targeted these other lows too. This low probably would have been a bit too close for me, but these 3 lows here are lows you can target, right? So if you want to, you could find another stop hunter strategy setup to short this to go even lower, right? This is an internal lower high that made a lower low. And what do? We wait for, obviously, people to buy, which people were probably buying this, thinking price could go back up here. They got stopped out. By who? Us. We take this trade, and you could take, again, the stop loss would almost get hit if you're taking it prior to anticipating this mitigation. Me personally, this risk reward, I would probably cover this PY because it's so close. Or at least cover the sell to buy or buy to sell here. I probably would have covered the buy to sell there in case it does a tiny mitigation, and then you get 2 risk reward. If you want to target the last remaining low in inducement here, feel free to. That would be your perfect 3 risk reward trade right there. So just giving you guys some free tips and tricks there. And we later reacted to this inducement low, and we shot up, guys. We completely shot up. But what happens later? We still went down. Why? We took out inducement here. This here is inducement. If you go to the 15-minute and draw out your highs and lows again, in terms of your range, this PY here is within discounts. Whenever you see a PY that looks like a valid zone or too obvious, it is inducement. Even sometimes things like this could be inducement, but this is a lot less likely to be inducement than something that's super obvious like this, because it's not even in premium. So once we took that out, what happens? We completely reversed, and there was an entry model that I teach that you could have taken, guys, here to take this short to the origin down below here. Would have been a perfect 11 risk reward trade, 13 risk reward if you have a tighter stop loss. But that was 3 hours after I took my initial entry. I was not looking for trades anymore. I didn't even look for this short continuation here, ARR in 8 session is great risk reward, right? A lot of people on YouTube even teach strategies that make you what? They say 10% monthly, which is, 10% monthly on a big account is a lot of money. But I know a lot of you guys do not have $10 million of just liquid cash to put into a trade account, or even 1 million or even 100K of liquid cash. Majority of people that are into trading or want to learn trading do not even have that money in the first place. You want to create steady income. And in order to do so, you need to have a system that creates or generates you a lot of risk reward. Otherwise, it will take you it'll take you forever to grow your account, right? If you can, in fact, let me pull up a calculator real quick and see if we can do some math here. Let's say you had $1,000. If you were to make 10%, let's say 10% monthly, right? And let's say you're working part-time right now, so you can still trade. 10% monthly is equivalent to 10 risk reward because we're risking 1% per trade for the instance, right? The strategies a lot of people teach, you can make probably 10% monthly. On a $1,000 account, if you do 10% monthly in a year, your account will grow to 3K. Okay, let's do the math again. After the second year, it'll grow to 9K. After the third year, it'll grow to 30K. After the fourth year, it'll grow to 100K, basically 97K. So you can see how 4 years of consistent profitable trading, which is not easy, by the way, by all means, regardless of the small return, it will take you 4 years to really make income where even then you cannot make a living off of that, right? Because you have to pay bills, things like that. And if you do the math, 100K divided by 4 years, that's 25K that you're making. And yes, that's making off of 1K, sure. But that is nowhere close enough to make or live a good, comfortable life, right? That's not a lifestyle you want. And that's why I like to teach a strategy and system that my students can use to make much more risk reward. We're making monthly returns in a single session, right? Even more sometimes. But anyway, nonetheless, with that rant, here is 8 session here. And I'm going to go into the other asset. So, because you guys were wondering, well, that's 8 risk reward there. Where did the other 11 risk reward that I said I made come from? They came from Euro USD. I'm not going to use this chart here. I would, but a lot of people said that from the previous video I made, they didn't really like or weren't a fan of the chart because of having 3 different charts up together. It causes confusion. So, especially for beginners, that makes complete sense to me. So, I'll keep it as one time frame. Okay, here. This is also an 8 session, but this is on Euro USD. And this is on Euro futures. In fact, I just have it marked out on Euro USD because if you go to the futures chart, it's not as good looking as in the candles, right? You need this indicator here. There's like a no gap indicator that you can probably download in the community tab. But basically there's gaps and it just looks very messy. You see like this gap here. These candles do not even, the open and close do not even exist in between these candles. It just looks very, very funky, and I don't like seeing this when I'm trading, right? Unless you have the indicator on. But even then with the indicator on, the coloring, I don't know. I like to keep things perfect, and yeah, no, it just messed with me too much. I just gave up on that, and so I tend to try to use the Forex chart, at least for just visuals charting. So that's what I did here. You can see Forex chart, you don't even need the gap indicator because everything is already smoothed out. The candle open and close are not different. They're the exact same. So everything is smooth. This makes it also a lot easier for to draw your POIs and for my ETU indicator to draw my valid zones, right? It's a lot easier for me to have my indicator draw zones when everything is smooth and not like gappy and weird. And I think it's activating right now. But let's see, it might take a while here. But you guys can see on here, it's a lot easier to see the POIs, right, on the Forex chart. This is something I noticed recently from experience than it is on the futures chart, right? It marks like every single POI invalid zone you could take trades from. Now, this is not filtering with 50% rule. If I filter 50% rule, it will filter out some bad zones and you get the best zones possible. But if we go on futures, I actually have not tested this with the indicator, but I believe it might not mark them. Let's see. Very interesting. So you can see same settings, but the futures chart is not marking this POI right here. This is an OB entry model here, and it's not marking it. So there's some inconsistencies, and it's nothing to do with the code for an indicator. It's just for some reason, it's the way that TradingView has it integrated, like with the open and close data of the candles on the futures chart. Just for some reason, even with me having real-time data, obviously, it just doesn't, like, I don't know, the code just doesn't work, right? So, or it does work, but it doesn't work as well. It's not having every single potential POI. So again, that's why I chart now, or I try to chart on the Euro USD chart. Sometimes I might forget low key, but I'll probably notice it. So you guys might see me switch between those once in a while. But nonetheless, let's just go over trades. That's the point of this video. You guys want to see how I made 30K in a single day trading just 8 session. So let's go over trades real quick. We were bullish on Euro USD. Let's go to the 15 minute. Now let's go to the 1 hour. What happened on the 1 hour higher time frame? We tapped into 1 hour POI. What happened from there? We created an internal bullish structure. Now this internal bullish structure is external structure on the 15 minute, right? We mitigated this 15 minute supply, or sell to buy, or am I about to sell? We should be making a lower low. Now we failed to make a lower here, but that's fine. Why? Because this could be a mitigation cycle to go up here, mitigate, and go and then take out the low. But no, the fact that we failed to take out the low, which is fine, but the main problem is we took out the high instead, which creates an internal break structure essentially for this specific time frame on the 15 minute. And on the 1 minute, that would be obviously a normal break structure. We basically made a change of character, break structure, whatever you want to call it. This is a little bit different because the high that created a new low is up here. But obviously, if you wait for this, you already missed the move. You already missed a transition in the market. So we picked the more prone or closer break structure here, which makes more sense here. So what was happening here? Well, I was taking a lower probability setup here on the first trade. Why? Because we took out the high as liquidity, right? Yes. But this is a low probability liquidity sweep, which I teach within the course and mentorship between low and high probability liquidity sweeps. This is a low probability liquidity sweep. Therefore, I lost on the first trade. I should have waited for an internal liquidity sweep after a fake reaction in the market to then enter, which I missed the initial entry here. Unfortunately, we had an entry here and I missed it. So I waited more to see a pullback. I missed this as well. Okay. I just was not focused on the chart perfect at the time, on Euro USD at least. But we had a trade here off this OB mitigation here. And this was aligned with the stop hunter strategy, which I taught you guys or discussed in a little bit of detail earlier in the video. So two factors aligned, and I had a limit order here and protected the high. This definitely could have taken out this high here, came back here, and then went down lower. But the fact that we had good liquidity here enough for me made me a lot more confident to have my stop loss here. If we did not have this internal fake change of character here, it's a lot more likely for price to take out this as an internal change of character, or fake internal change of character as an internal liquidity sweep. But the fact that we had this here, it was giving me confidence to have my stop loss placed there basically. And we had a 3 reward. You don't want to be targeting too far. What did I target? The flip. When we're bullish, you don't want to have aggressive targets. I should not or ever never see you guys target this low here. It does not make any sense if we're bullish. You can target the origin, but again, that's more aggressive. If we're trending, we're in a trend. We had a POC on the 15 minute, right? Within this gap, we had a POC. And so we had a flip and a POC both aligned, which gives the flip a higher probability of holding. Now, what was my next trade? We had an OB entry model right here. We mitigated the OB and we inversed the fair value gap. So 2 confluences again. Unfortunately, we did not have internal change of character. If we had that, it would have been even more confluence, but you would have missed the move. I don't wait for that. So we have a 9 risk reward trade here. And what was my target? Clearly, the weak high. Because why? We're bullish. If we're bullish, we're taking out highs and protecting lows. Same thing happened here. You could have caught a very nice long here off this origin here that did an internal liquidity sweep, because I guess they didn't sweep enough liquidity before to catch that massive upside move. But of course, I did not catch that, right? I was done with my trade here. That is 11 risk reward, or basically the rest of the 11 risk reward there. So 11 risk reward on Euro USD futures and 8 risk reward on ES trading 8 session. And this was about an hour and 40 minutes of trading. And again, both were within the session, right? An hour and 40 minutes of trading, 30K. If you guys really want to learn how I do this, I would recommend you guys start off with the free Discord. I have free content on my YouTube channel, but it's pretty disorganized, I'd say. And it honestly doesn't cover a lot of nuances and stuff that I teach specifically in the course and mentorship. So if you are interested in truly learning the specifics and ins and outs of my system, I'd recommend checking out the link to my website. It will send you to my WAP page where you can check out the ETU 100R risk reward advanced course. I'd highly recommend that course. And then if you need further help, get the one-on-one mentorship, because that is definitely a lot more expensive than the course, because you're asking for my own personal time to guide you personally to profitability. And that just all depends on you, right? And how serious you are. But that basically covers today's trades I took to make me 30K in a single trading session. If you guys did enjoy, make sure to leave a like down below, and I shall see you guys either within the course or the free Discord.